Welcome to the deep dive. We're jumping straight into some pretty big news from Coinbase today.
We are.
Yeah.
We're looking at their Q1 2025 shareholder letter and also this just announced plan to acquire Deribit.
Right. So our mission really is to dig into these announcements. We want to cut through the noise and figure out what it all means for you.
Exactly. We'll be looking at their financial health, the strategy behind buying Deribit, and, what this might signal for where Coinbase is headed.
Okay, so we've got the official shareholder letter packed with data and their blog post about the Deribit deal. Those are our main sources. We're going to break down Q1 performance, really examine this Deribit move, and then talk about the bigger picture, their future outlook.
Sounds good. Where should we start? The financials.
Yeah, let's unpack those Q1 2025 numbers first. What were the headline figures?
Right. So total revenue came in at $2.0 billion for the quarter.
$2 billion. Okay.
Yeah. And net income landed at $66 million, with adjusted EBITDA reaching, well, a pretty robust $930 million.
$930 million adjusted EBITDA. Okay, that's strong. But where's that revenue actually coming from?
Good question. So the bulk of it, $1.3 billion, was transaction revenue.
Trading fees, based on.
Mostly. $1.1 billion of that was from consumer trading. Then you had $99 million from institutions and $68 million from sort of other transaction stuff.
Okay, and the rest? Almost $700 million.
That came from their subscription and services side, $698 million to be precise.
And what's driving that part?
Well, the big drivers there were stablecoins, mostly USDC, that brought in $298 million, and blockchain rewards generated $197 million.
Interesting. So USDC is a huge piece of that now.
It really is. And they highlighted some key things there. The USDC market cap went over $60 billion.
Yeah.
And the average amount of USDC held inside Coinbase products, like wallets and accounts, grew significantly to $12.3 billion.
So people are holding more stablecoins on the platform.
Yes, and institutions, too. They saw growth in institutional USDC balances. And interestingly, also growth in USDC held off the Coinbase platform.
What does that tell us, that off-platform growth?
Well, it suggests USDC is being used for more than just trading on Coinbase, right? Maybe payments, DeFi, other applications. It's becoming more like, digital cash out in the wild.
Got it. And the institutional confidence seems to be growing, too.
Definitely. Okay, what about trading volume? I saw spot volume declined.
It did, yeah. Total spot volume was down in Q1. But Coinbase makes the point that they actually did better than the overall market trend. So maybe the whole market saw a bigger dip.
Oh, okay. Context matters.
Exactly. And they also mentioned growth in their global derivatives trading volume. What's the takeaway there?
That's quite significant, I think. While spot trading can be very volatile and sentiment-driven, growth in derivatives suggests a maturing market.
How so?
Well, people use derivatives like futures and options for more strategic things. Hedging risk, making more complex bets. It's less about just buying low, selling high. It points to more sophisticated participants.
And maybe where Coinbase sees its own future growth.
Could be. Ties into the Deribit news, doesn't it?
It certainly does. Before we get there, though, they mentioned operating expenses were $1.3 billion. Noted increases in marketing and customer support. Seems logical if they're growing.
Yeah, standard growing pains, you could say. More users, more activity usually means spending more on outreach and support. But their balance sheet looks solid. They ended Q1 with $9.9 billion in USD resources, cash and equivalents.
Plus their crypto holdings.
Right, which gives them the firepower for big moves.
Like acquiring Deribit. Announced May 8th. Let's unpack this. Deribit, for anyone maybe not familiar, they're the big player in crypto options.
Absolutely dominant. The letter mentions, $30 billion in open interest currently, and over $1 trillion in trading volume last year. That's huge scale.
So why is Coinbase buying them? What's the rationale?
They're pretty upfront about it. They want to create, and I quote loosely here, the most comprehensive institutional derivatives platform.
Combining Deribit's options with their own futures business.
Exactly. It's about getting market leadership and instant scale in crypto derivatives, which is, a rapidly growing part of the market.
And it potentially helps their bottom line too, right? Options trading isn't always tied directly to bull or bear markets.
That's a key point. Options can be used for hedging and generating income in different market conditions. So it could make Coinbase's revenue streams maybe a bit less cyclical, less reliant purely on spot trading mania.
Makes sense. Plus, it's a big push for their global plans.
Yeah.
Deribit has a strong international footprint already.
It accelerates their whole global derivative strategy significantly. This isn't just a U.S. play. It's aimed at becoming a global leader across the board in crypto trading.
So the price tag.
About $2.9 billion total. That's made up of $700 million in cash
Okay.
and 11 million shares of Coinbase stock.
So a mix of cash and stock. What does that signal?
Well, using stock shows confidence in their own future value, aligns incentives maybe. The cash portion shows they have the resources readily available. Of course, it's all subject to regulatory approvals.
Always the key hurdle in crypto deals. They expect it to close by year-end, pending those approvals.
Yeah, that'll be one to watch.
They also reminded us of their M&A track record, mentioning past acquisitions like Sapo, Tagomi, FairX.
Great, they've done this before, buying specific expertise or platforms to bolt onto their core offering, especially for institutional clients. It fits a pattern.
And they included a quote from the Deribit CEO, Luke Strigers, sounding pretty positive about joining forces.
Yeah, you'd expect that. But fundamentally, combining Deribit's options dominance with Coinbase's reach and existing derivatives work, well, it creates a powerhouse.
It really does. Makes you wonder how competitors will respond.
For sure. Okay, so shifting gears slightly, let's look at the broader picture from the shareholder letter. Their 2025 priorities.
They listed three main ones: driving revenue, driving utility.
Utility, meaning actual use cases for crypto beyond speculation.
Exactly. And third, building the foundations for long-term growth. Infrastructure, basically.
Standard pillars for a growing tech company, but the emphasis on utility is key in the crypto space.
They claim market share gains in both spot and derivatives globally. And they listed some regulatory wins. VASP registration in Argentina, being the largest FCA-registered crypto firm in the UK, and getting registered with India's Financial Intelligence Unit. Those sound like important steps for global expansion.
Absolutely critical. Navigating that global regulatory patchwork is probably one of their biggest challenges and biggest opportunities. These registrations unlock major markets.
Then on the utility front, they mentioned Bitcoin-backed USDC loans on Base. What exactly is that?
Okay, so Base is their layer 2 network, built to make Ethereum transactions faster and cheaper, offering loans where you put up Bitcoin as collateral but get paid out in USDC stablecoins. It's a way to unlock the value of your Bitcoin without selling it, using it in a more spendable form.
Ah, okay. Kind of like a crypto pawn shop, but fancier.
Sort of, yeah. It adds a new financial primitive to their ecosystem. And they mention other infrastructure upgrades too. Verified pools, base improvements like flash blocks, acquiring teams like Ironfish and Spindle.
What's the simple takeaway from all that tech stuff?
It's all about making the underlying tech work better. Faster, cheaper, more secure, more scalable. Adding privacy features with Ironfish, maybe growth tools with Spindle. It's about making Base a more attractive place to build and transact.
Got it. They also touched on policy stuff. An executive order about a U.S. strategic Bitcoin reserve, progress on crypto legislation, and of course the SEC lawsuit dismissal.
Yeah, the policy and legal front is always buzzing. The potential for a U.S. Bitcoin reserve is, well, fascinating. Any clearer regulation is generally seen as positive for established players like Coinbase. And winning against the SEC was obviously a huge relief for them.
No doubt. Okay, finally, looking ahead, Q2 outlook. They gave some numbers.
They did. They said April transaction revenue was around $240 million.
Okay, a monthly snapshot.
Yeah. And for Q2 overall, they expect subscription and services revenue between $600 and $680 million. Interestingly, they expect stablecoin revenue to grow, but blockchain rewards to decline, maybe due to lower asset prices overall.
So a bit of a shift within that subscription bucket.
Seems like it. And they gave expense guidance too, acknowledging ongoing investments, but also the, general macro uncertainty out there.
Right. So putting it all together, the vision seems to be expanding real-world crypto use, strengthening the trading platform, especially with Deribit, and building the rails for a future financial system.
That sums it up pretty well. I think it's a long-term play focused on building a comprehensive, compliant, and innovative platform for this digital economy idea.
Okay, so let's wrap this deep dive. Key takeaways seem to be strong Q1 results, a really significant strategic move with Deribit aiming for derivatives leadership,
Dominance even.
and continued progress on expanding crypto utility, global reach, and navigating that tricky regulatory world.
Definitely. Understanding these moves is pretty crucial if you're trying to follow where the crypto economy might be heading, especially that institutional angle.
Absolutely. So here's a final thought for you to chew on. With Coinbase making this huge play for derivatives infrastructure by buying Deribit, what could be the next big evolution in crypto market structure? What other pieces are needed, and how might that shake things up for users and institutions down the line?
That's a great question to ponder. The infrastructure build-out is far from over.
Indeed. Definitely something to think about. Thanks for joining us for this deep dive.